Hello ladies and gentlemen, I'm Joseph Novichkov, Senior Trading Manager with GDM. Today's outlook, firstly as usual, let's start with the Asian markets. They slightly advanced on Wednesday, extending a global rally that of course pushed major US indices to record on expectations of further easing from Japan and of course some resolution of concerns over the UK political uncertainty. In Japan, as we've been tracking, the Nikkei 225 index closed up 135.78 points, or about 0.84%, extending Monday and Tuesday's combined 6.5% rally. Japanese stocks got a boost from a weaker yen on expectations that a boost of fiscal and, of course, monetary easing was on the cards after Prime Minister Shinzo Abe's coalition won a landslide victory in upper house election over the weekend. That of course helped to weaken the Japanese yen, with the dollar fetching about 104.29 yen on Wednesday after trading near the 100 handle late last week. The currency pair was off an earlier high of 104.88. Of course, we're also tracking the European stocks. They opened slightly higher on Wednesday after a rally in markets in the US and Asia, as of course markets try to continue their post-Brexit recovery on hopes for further monetary policy easing. As we're tracking, the Pan-European Stock 600 index was up about 0.17%. As we're looking at Theresa May, who will currently reside Home Secretary, is set to be installed as Prime Minister by Wednesday evening, replacing David Cameron, who of course resigned after the Brexit vote last month. It remained, of course, unclear when Theresa May will trigger Article 50, which initiates the withdrawal process from the EU. It was signaled that it could be later this year or even 2017. The pound rose 2.1% to 1.3265, pulling further away from the 30-year low of 1.2798 last week. Although investors remain uncertain about May's approach to negotiating Britain's departure from the EU, while of course the euro remained little changed at 1.1047. Gold in the commodity sector on Wednesday edged up slightly after suffering its biggest fall in 7 weeks, with of course global equities rallying on easing political uncertainty in Britain, which of course is set to get a new Prime Minister, as we mentioned. The yellow metal edged up 0.4% to 1336.90 an ounce late Asia trade. It fell about 1.7% on Tuesday in its biggest one-day drop since May 24, touching a near 2-week low of 1329.75. Also, we've been looking at the long to medium term, that the trend will continue to the upwards, but of course some swings down to the 1300 are also expected. Also tracking the holdings of the SPDR Gold Trust, the world's largest gold-backed exchange-traded fund, they fell about 1.63% to 965.22 tons on Tuesday. That was its biggest one-day decline since December 2, 2015. Crude futures also fell on Tuesday as investors locked in gains after oil prices surged nearly 5% in the previous session, partially on forecasts from the US government and OPEC that demand would increase next year. Oil prices, however, were also under pressure from industry data that showed a surprise build in US crude stocks. Prices and their gains in other commodities, including gold and stronger US dollar, which gained against a basket of currencies, is also pushing the crude prices down. US crude dropped 28 cents to 46.52 a barrel after ending up previous session 2.06 or 4.6%. That's all from the most important of today. Keep on your eyes on the economic calendar for the Bank of Canada interest rate decision later on today. That's all. See you next time.